and welcome to the Small Business Tax Savings Podcast, powered by JETRO and Associates. Get ready for another action-packed episode from our team that will help you save time, taxes, and keep more money in your pocket.
Hi everybody, Mike Jesowshek, CPA and founder over at JETRO and Associates, and thank you for tuning in today. We want to touch and continue on the topic that we started last week. Last week we talked about expense acceleration, which was basically for cash basis tax filers using expenses in the current year, taking expenses now in the current year for maybe things that you might be doing in the future year. So we use as an example advertising. Let's say you're doing an ad spend in February. You know you're going to be spending that money in February, but you have some cash on hand here at year end. You might want to prepay for that ad spend that you're going to do in February to get that cash off the books, get the expense on this year's taxes. Now, I want to flip the switch a little bit and talk about income deferment. And this is, again, just for cash basis filers. And what you can do is you can reduce your income by asking customers to wait on paying you until next year. The income then becomes taxable in the next year rather than this year. So this is kind of the opposite of the expense acceleration. You may also want to consider not billing your customers until after the first of the year. And that way you can ensure that you have deferred the income into that next tax year. Now, this strategy is completely controllable by the business owner, and the key is knowing how much to defer. So I want to talk about some tips when deferring income. 1, always keep track of who owes you the money. 2, don't overextend yourself. Saving on taxes is not worth going broke or really putting your business in an uncontrollable position. 3, discuss with customers that might have questions on what you're trying to do here. 4, remember that the income will still show, it just won't be until next year. And then 5, generally only do this with what we call good payers, not customers who pay slow or late. And always keep in mind, income deferment is not like spending money. When you spend money, the money is gone. But with income deferment, the money is still coming and you get to keep it. This is just a timing change only. Many of your customers will like this too, because they might not need the expenses on their return as much as most people like keeping their money as long as possible. So just make sure that they pay soon after the new year is, so you can make sure you do collect that money in the new year. So again, this is a tax year-end tax plan strategy called income deferment, kind of the opposite of expense acceleration. Both options are trying to lower your tax liability this year. So again, I want to thank you for tuning in. We're going to continue with these year-end tax plan strategies and tips as we lead up to year-end. Everyone, thanks for tuning in, and we'll see you next week.
This has been another episode of the Small Business Tax Savings Podcast from the team at JETRO and Associates. If you have any questions, feel free to email them. tax@jetrotax.com. We have packages for small business owners starting at just $75 a month. If you enjoyed our podcast, please take the time out to give us a 5-star review in iTunes or wherever you listen. This helps us to bring you useful tips to help you grow your small business. Thanks for listening and have a great day.